High performance is not only discipline, it's a direction, and direction is impossible without financial clarity. In 2026, women leaders are not just expected to lead teams. If they are expected to lead outcomes, they are also expected to lead outcomes, profitability, resilience, risk readiness, and strategic growth. Now, budgets are tighter, threats are smarter, and AI is accelerating decisions. The leaders who win are the ones who can translate vision into numbers without losing humanity. Financial mindset isn't finance job, it's leadership, ownership, trade-offs, priorities, value creation, and proof. Today we have Dr. C.A. Sangeeta Shankaran Sumesh, CFO turned business leader and team coach, an independent director, bringing boardroom grade clarity to women leaders who can think, decide, and grow with confidence. Before we dive into the topic, let's have a small video about Power of Knowing Forum, and then we will dive into the topic. We are having our speaker joining in a minute. Let's wait for her to join. There seems to be a small glitch in our speaker joining. Uh, she's joining in a minute. Yeah. Hi, Sangeeta. You're able to hear us?
Yes, yes. Hi, hi. Good evening. How are you?
Good, Sangeeta. How are you?
Yes, I'm very well. Thank you.
And there was a small glitch where we could not get you on the screen while we started the intro. So,
No
welcome
worries.
back to our podcast, Sangeeta. We
Thank you.
honored to have you back in our podcast. It's been a privilege to
Yes,
have you
you're
back.
doing an amazing job.
Thank you, ma'am. Sangeeta, let's dive into the topic before we. What changes the high performance women leaders start leading with financial mindset? Because everything is finance, which today we need to look at. You look at any business, the numbers talk tomorrow today. So your take on it, Sangeeta.
Yes. So before we actually, deep dive into the topic, I want to make some statements. So
Yeah,
firstly, I mean, even though this is mainly for women leaders, I
yeah,
believe this is gender agnostic.
yeah,
And I think it's also important to highlight why women, because let me just share, some real life examples. So one is about a friend of mine who suddenly lost her husband, and she had no clue on the finances. She didn't know how to charge and manage. Another friend of mine, the husband divorced her after like 25 years, and she is also a qualified chartered accountant, but managing the company's finances very well, but she was not in a position to manage the personal finance, right? Because she had left it all to the husband.
yeah,
And similarly, in a business scenario as well, somebody who was thriving in the business, who used to, manage sales, the HR, the admin, and everything, the tech and everything. But, the finance part, the entrepreneur used to leave it to her husband to manage. So I think that's very important, that women actually take charge. The irony is, if you go for any shopping, right? The women are there, negotiating so hard and, doing so well there. But unfortunately, when it comes to managing money, be it their personal or the professional finances, there is always, I feel, a mental block. And I think that the women need to break free from, right? So while my points
Yeah.
are going to be gender agnostic, I think it's equally important that women who are, watching this should probably, watch it with a lot more attention is what I would want to share to start with.
Yeah, Sangeeta, I think what we are saying is finance is not related to men or women. It is the ecosystem
Absolutely.
that has to be managed. I completely agree
True.
with you. Now, coming to the question, what is that? What changes when high performing women start leading with financial mindset? So, are we saying that they are equipped, but they don't take it seriously? Are you saying in that sense, Sangeeta, or is there a
Um,
different opinion on that?
Yeah, I think it's slightly different. Like, I have seen a lot of high performers, both men and women, who are like so good and adept at doing in their domain, right? They are so knowledgeable and everything. But finance, they feel, oh, it's not my forte, right? And therefore, while they are so good at it, they have the experience, wisdom, knowledge in their domain. When it comes to finance matters, they are like, this is not meant for me. I have my CFO. The CFO is going to manage. Why should I look at finance? So that is the mindset. And therefore, that mindset needs to change. Now, in my experience as a business and leadership coach and working with different corporate leaders, there's something that I've noticed. One is many of them don't even know the language of finance, right? They may be at senior positions, but they may not be financially literate, which I think they need to overcome. And the people who are financially literate, they need to adopt a financial mindset, like you said. Now, what is the difference between the two? Financial literacy is basically knowing everything about finance, the ability to read financial statements, knowing the financial terms, what are the key metrics, what is the budget, what is the forecast, what is variance, and stuff like that. That is your uh, financial literacy. Now, what is financial mindset? Financial mindset, I would say, is one step above financial literacy. So while you are financially literate, financial mindset calls for thinking and acting through a financial lens. Like, you look at it from holistically through the finance aspect. For example, taking ownership of a financial outcome, right? And then asking important questions like, what is the financial implication of a particular decision I'm taking? What is the repercussion? How does it affect my margins? What is going to be my cash situation? And so basically, it's important to look at finance from a financial mindset, and that's where your true leadership qualities stand out.
What you're saying is you should think in that mindset what you want to perform when you look at finances, right? So that is the point
Yes,
that you're saying. And
absolutely.
also there would be some behavior pattern that you will have, right? So when you look at mindset itself, what are the three behaviors you see in leaders who truly think financially, even if they aren't from the finance background? Because that's the topic that we are looking at today.
Correct. Yeah. So, one I would say, which is low hanging fruit, and most common is people just think by looking at the cost, right? That is cost reduction, cost cutting, decreasing cost. They feel, oh, I'm on top of the game on my finance, right? So they're just looking at cost angle, right? And they're not thinking about the cash or the financial repercussions. What happens to the margin, the working capital, those aspects are not looked upon. Now, that is the most common one. The other two slightly uncommon ones are like, one is not taking the ownership of financial outcomes, right? So, for example, my sales went up, but then my margins have dropped. That is a red flag. A leader needs to be thinking on those lines, right? So that is when your the financial mindset actually starts to kick in. Another thing could be like uh, uh, getting obsessed about efficiency levels. Like, for example, How can I improve my productivity levels? Can I eliminate the waste? Can I improvise the processes, process efficiency? If they can start focusing on that, that will be really great. But like I said, the common one is only the first one from a cost perspective. The other two, I have noticed in very few cases, to be very honest.
Now, what are the common leadership mistakes when they look at finance is seen as someone's responsibility? You started with that point because somebody is taking care of the finances, the CFO will take over the finances. But how are this leadership seeing these mistakes? Because uh, most of the time it's literacy. Because if you ask me to, I am a technical guy. If you ask me to do a financial thing, I will not be in a position to do. If you are, I am accepting this online because for me finance is looked at somebody, but I will see how much am I spending, how much am I
Mm,
looking at the
right.
current scenario where we are. But how do the ROI work, what is that we are missing, where are the gaps? That literacy is still a long way for me also. So give us some insight there, Dr. Sangeeta.
Okay. So let me share about three things out here. So one is taking poor business decisions, right? That without considering the financial impact, and therefore that leads to a decrease in the value. So let me give you an example. There could be like a new initiative or a new deal that's being closed, or maybe a new product that's being launched, right? These are all good things, but a person needs to ask, a leader needs to ask, what is the value that's being created? What is the financial implication this particular aspect is bringing onto the business? So that's when you look at it holistically. The second thing would be, uh, the mistake I would say is lack of business partnering. And many times leaders tend to work in silos. Me, my team, this is my domain, this is what I will deliver, and they're not looking at like a big picture, right? And therefore, they are not understanding what are the trade-offs or what is the financial implication that it is resulting in. And the third thing is, inefficiencies tend to get normalized. Therefore, you would probably see duplication in efforts, underutilization of resources, and stuff like that. And therefore, not having this financial lens, right? It lacks the leadership clarity that's being required.
So what we are looking at is defining it as a decision making with visibility that brings value is what we are saying. The risk and trade-offs are to be understood, and
Absolutely.
keep
Yes.
it practical, right? What you said in the start of it, where you say
Yes.
cash, margin, working capital, and ROI. So if I look at, I have cash which I have put, working capital I have put, and what is that ROI and how do I look at is where
Yes.
I think what you're saying also is financial mindset isn't math, it is leadership clarity on how
Absolutely.
to run the business is what you're saying. Now, coming to
Absolutely.
that kind of clarity, that if you want, how do high performance women leaders especially benefit from finance first thinking?
Yeah, super. So, like, finance is the backbone of any industry. Any business, however big, small, whichever geography, finance is like the bloodline, the backbone. Everything runs on, finance for a business. But having said that, there are many high performance leaders. They are excellent at driving their results, but they are not looking at sustainability or profitability, right? They're just like doing it more from an operational perspective. And I think that shift is important to, again, bring in the financial lens to what they are doing.
You need to always look at having the finance as the first piece when we look at your
Absolutely.
business, right? So that's
Yes,
what you're saying. Where do
absolutely.
where do women leaders get underestimated, whether it is at the execution level, at the influence level, or the ownership of the business outcomes? Where do you think they
I think
get
undoubtedly it is the ownership of the business outcomes. Because let me give you an example. Like, if they're not thinking in financial terms, let's say there is a delay in a particular project. They're like, it's okay, it's delayed because of ABCD reasons. But then,
Hmm.
after a couple of days or weeks, whatever, this project has been delivered very successfully, which is great from an operational perspective. But what gets missed in the process is every delay is actually, your finance meter is running, right? That they tend to miss because your project costs have increased as a result. Now, if they don't have this financial mindset, they would just say, hey, operationally, this project was a success. I have delivered it. It has been as per my client's requirements. But they fail to notice the financial impact that it is causing. And I think that is why I'm saying taking the ownership of the business outcome, not just from an operational perspective, but completely including the financial aspect of the outcome, that is very important.
Now, many of the see, I think many of the people don't look at a language that the finance people normally talk about, right? Now, a finance guy will understand a finance lady. If you talk to a doctor talking to a doctor, their discussion itself is a different
True.
level, right? So, how does the financial language increase authority in CXO and boardrooms?
So, see, it's very simple. Now, you and I are talking in English, right? And therefore, we understand each other. We are able to communicate effectively. Now, if I'm going to talk to you, let's say in Russian or some other language that you don't understand, you're not going to be able to get exactly what I'm meaning. And, I may not be able to articulate as effectively as I want to. Right. So the same goes with the language of finance.
Hmm.
And it's important that for effective communication and easy understanding, and we need to be on the same page, we need to speak the same language. Right. So that is important. And simply because numbers actually gives a lot of weightage to your voice, right? Because if you're negotiating budgets or talking about headcount or talking about strategy, priorities, or you want to connect strategy with outcomes, finance is what is actually empowering you, right? Because that's when you're positioning yourself as a value creator and you giving the message loud and clear, like, hey, don't mess with me. I know what I'm bringing to the table. This is the value that I'm adding, right? So therefore, that message becomes very, very powerful, and people take you seriously, and a lot of weightage is automatically given to what you're talking. And that's why it's important to speak the language of finance.
Now, what you are saying, make it empowering and real. It has to be
Yes,
very clear. Now,
absolutely.
and this is one thing that I've learned from my bosses, because number speaks where exactly the results are. So
Yes,
numbers give you the voice of weight, and tie that negotiation to the budgets that we are having,
correct,
headcount, strategic priorities.
correct.
That's it.
Yes,
When you speak the outcomes, you don't need permission to lead. So I think you are giving the path by default, saying that today we are leading with this. This is the number. This is where we stand, and that is that clarity. Now, if you
correct.
had to teach one financial framework to every leader, what it would be?
I think the most important thing is they need to focus on cash, right? Because, like they say, top line is vanity, bottom line is sanity, but cash is reality.
Okay.
So, therefore, one needs to know exactly about the cash.
So you are saying you need to know what is vanity, what is sanity, and the real money that is going to be the cash that is heading to what
Exactly.
was, right? So
Yes.
now, what is the simple model that helps leaders to connect to outcomes, whether it is revenue, cost, risk, or cash? So what is that it connects to the leaders'
Okay.
actions?
Okay. So let me share my cash mantra here, right? Because this is what I do in my workshops when I'm dealing with different corporate leaders, when I'm doing my finance workshops. I give them this cash mantra. Now, what is the cash mantra? It's very simple. Cash as an acronym. What does it stand for? C is to collect on time. So, whatever are your receivables, your money's due, ensure you collect it on time. Now, if there is a credit period of 30 days, 60 days, whatever, ensure you're collecting it within the stipulated time period, because the longer you take, the longer the probability of recovery is also going to come down. They are inversely proportional. So therefore, C is to collect on time. A is to anticipate what is the money you're going to get in, and money that's going to go out, because that's when you're able to plan your cash, right? You're planning your finances very effectively. So A is to anticipate your in and out. S is to systematically monitor the movement of your funds. Monitor, are there like any unknown debits, or some monies, sometimes there could be mistake, or has the bank overcharged you, stuff like that. So systematically keep monitoring, or are there some checks that have not been presented, right? So systematically monitor and know what exactly is your cash situation. And H is the habit of reserves, right? In fact, even the pre-pandemic time, I used to insist on this habit of reserves, because if there's an emergency, it shouldn't be like your business is gone kaput, right? So therefore it's important to have some amount as an emergency, and this cash mantra, you can use it for your personal finance also. So let me repeat it. C is to collect on time, A is to anticipate your in and out, S is to systematically monitor, and H is the habit of reserves. So following this simple model is going to help you and your business from a cash perspective.
I think one pointer I would like to say, in India at least, what our ancestors have done is they've done this cash mantra for a very long time, I think. So if you really look at the guys who have the wealth of land and other stuff today, are the people
Right,
whose parents have kept saying that this would be for a future investment, this is what I will take it for a future. And we've been so accustomed to things like these, is where we see our parents and great grandparents have told, invest on
right,
something which can be as a asset tomorrow, where you can encash
correct.
it when it is required in the during the reserves time, where you need that reserves to be. Now,
Yes.
how can leaders use weekly in the weekly meetings, not once in a quarter? Because when we look at a quarterly financial thing, it becomes a long gap. Now there could be a lot of burnout that could have happened, and we only look at for that thing. Now how do we look at this? Can we be doing it on a weekly? Will it be a overkill, or is it required?
Firstly, it is required. Now, the frequency depends on your nature of business, right? The kind of industry, the volumes that you're in. So, I would suggest the best way is to have a finance dashboard, not just exclusively for finance. So, for example, if you're a sales head, right? So, have a dashboard that talks about the different aspect of sales, and one element there should be your finance. Like, what is my DSO? Right, as a sales head, you need to be aware of it, right? You, as a sales leader, you must know what your collections are, what is your DSO days, right? Stuff like that you must be aware of, and therefore include that in your weekly, say, sales meetings. As a sales leader, if you're meeting your sales team on a weekly basis, that should be one component of it, right? Because that's when even the message as a leader that you're delivering is cash is something important, right, for the business. So therefore that messaging becomes loud and clear. And it can the frequency, definitely not a quarter, because I think that's too long. Weekly, bi-weekly, or monthly, I think is a good window to have. And it also depends on the nature of your business, right? And the situation your business is. Now, supposing your business is under tight cash crunch, then you may have to monitor it on a weekly basis. If not, if you're kind of okay, if your customers are paying you on time, and there are things are fairly smooth, then probably once a month the review is all right. But it should be an element in the dashboard. So that indicates that you're giving a lot of importance to the financial aspect of the business.
I was seeing somewhere, I don't know whether it was Dr. Devi Shetty or anybody, where there was a statement which you rightly said now, dashboard on the finances side, right? And
Yeah.
he said during COVID period, he mentioned it. I'm not sure whether I can take whether it is Devi Shetty or somebody, but a
Okay.
leader clearly said, saying that we have daily dashboards on finance, because that is the running oil for us. Because we
Yes.
can burn so many things, but if we burn our own caches and we are not reviewing that, that becomes a
Absolutely.
big mistake over the period, and you may not be in a position to recover it back because we've already put that money on this. So
True.
I think what you're saying is, I don't know whether how feasible it is to have a daily financial review, but I think somewhere we need to know what is our spending, what is that is coming, what is going, what is coming is what I think
Absolutely.
which will help us.
Absolutely. Yes. Yes.
Uh,
Definitely.
what we also look at how the value tree looks at what is the driver based thinking. So what is that we drive, and how is the unit based economy, because most of
Absolutely.
the things are products. Now how many products are we selling, how many are getting rejected coming back. So these are pointers. I think the best framework is one you can actually use it on Monday. I think tomorrow if I want to use it I have to use it. So I think that
Yes.
is where I think how do
Correct.
leaders make trade-offs better, or your take on it.
Okay. 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 So let me share 5 pointers out here. So I think when they are, doing a decision and thinking about a decision and want to know about the trade-off, the first thing is they need to evaluate the short-term versus long-term. What is going to be the impact from a business, operational, and finance perspective from a short-term as well as a long-term perspective. Next would be on the P&L impact, right? A particular decision, how does it impact my P&L? How this is going to impact my margins? So those are some aspects they need to look at. The third thing I would say is to evaluate the risks, right? And see what actions they can take to mitigate the potential risks. The fourth thing I would say is definitely on the cash, right? Knowing how it's going to impact my cash. And lastly, what is the value that it's going to create for my business? Is it going to enhance the value of my business from a holistic my net worth perspective? So these are, I think, they can have this as probably as a checklist to see how they can actually deal with trade-offs, is what I would say.
Now, we just took another example where we said we don't know when what is happening and how much we've burnt, right? So, taking that example only,
Mm.
when do you think, or how do we decide what to stop, where to scale, and when to
Yeah.
scale, and what also to be scaled is one more point, and what to protect? Because now everything is going to be tied up to your business. So how do we look at what to stop, what to scale, and what to protect?
Okay, okay. That's a nice question. So, if we were to look at what to stop, I would say as a leader, you must be in a position to stop anything that is actually eating into your resources, but eating into your resources and not creating value for the business, right? It's just kind of draining your resources. It is probably not relevant anymore to the business. And, I have also noticed during my coaching sessions that some processes are just being carried on for the sake of legacy, right? Or sometimes due to internal processes. So I think anything like that, they must be in a position to stop. So, to give you an example, for instance, if I would to say, if there is a particular product or a particular customer where the margins are very low, right? It's probably not really adding values and it's just being carried on for the sake of carrying. So that should be stopped. Similarly, I have noticed many meetings that happen, right? Just because every Monday we have to meet, we just meet, discuss. Sometimes it's not really adding value to anybody. It's probably just eating into everybody's time. And there's probably no value. So stuff like that, one must completely stop. So as a leader, you'll have to take stock of such things, and that's when it becomes important. And also I think many times leaders are just firefighting the day-to-day stuff and they don't have time or they're not thinking about such aspects. So I'm really glad that you brought this out. So that is on what to stop. I think next you were asking about scaling, right? I think what to scale. So
Yeah.
from a scaling, perspective, I would say, the contra of this. For example, how can you deliver value? Value be it financial, be it from a strategic perspective. So start thinking in terms of value, because that's when you can start scaling more. And then the from a scaling perspective, it should be something that has a proven track record, right? Okay, doing this has actually helped me gain my customer. For example, if you are spending on marketing and that has given you a good lead generation, which has converted into more customers for you, then that's something you may want to look at to see how you can scale. Similarly, can I grow, without increasing my cost, right? Disproportionately. So that is something to say, if it's a fixed cost, for example, I invest some amount, but then my benefit has been really huge, and it has a huger multiplying effect. So that can be something that you may want to scale. So if I were to give you some examples in that. mm, Maybe I would say like areas where your customer segment is strong. Maybe some particular business models have been very efficient and you may want to replicate it, from one geography to another. And those things are going to help you scale a lot more. So that is one. And I think the third you said was what to
What to
protect,
protect?
right?
Yeah.
Yeah, what to protect. Yes. So protect some things that are actually going to create long term value, because you may not be seeing immediate returns. In the short term, probably it's not may not be something that is very effective, but in the long term it really has a lot of good value addition to the business. So obviously you may want to protect things like that, and then to leverage on your USP. What is unique to you, what is your competitive advantage, right? So see how you can leverage on that, and uh, how is it going to help your future, right? The future of the business. So start thinking beyond the present terms. I think that will help you. So example is like, how is it going to help you as a brand, right? What is your talent and the leadership pipeline? Do you have a succession planning? Do your customers trust you? What sort of innovation are you able to come? Are you able to develop your leaders, right? So those are areas that you must work on in a very strategic manner, because that is what is helping you protect the value for the business.
I think there is a lot of things that you have explained. I think what you are saying is keep stop what is not giving you value. That's the first point that you're saying. And what needs to scale, where you see a value and that can be scaled, is what we should look at. And what is to protect is to protect the interests of the people, protect the interests of the customers, and see what is giving benefits for them, and we protect that customer
Yes.
pointer. So I think
Yes.
these are the pointers that are very crucial for any business to strike. What question should leaders ask before approving new initiatives or AI transformation? Because now what we are talking is more on AI, and so
Yes.
there is a lot of AI in there and a lot of
Right.
initiatives around AI. So how do the leaders ask the right questions to get these initiatives implemented?
I think it's a very, very pertinent question that you asked, considering that everything is about AI at present. So very pertinent. So to answer you first, I would say they need to start thinking about the value, and not just doing because like AI is in trend and everybody is doing, my competitors are doing, and therefore I want to do. That's not the right approach. But first, to evaluate the value that it's giving, going to give to your business. And the second, from the value, is what is the impact it's creating. Impact it's creating on all my stakeholders, be it my customers, my employees, for my business. So look at it holistically from the impact perspective. Next, evaluate the risks, right? So what are the risks that is being involved by doing this AI? Is it just going to be for my short term? Is it, how is it going to pan out in the long term for my business? What are the potential threat that is has? So look at from a risk perspective. Fourthly, obviously, I would say it's from a finance perspective, right? Does it make financial sense? What is going to be my ROI? How is it going to impact my cash? What is going to be the margins? Uh, how are my customers going to be about it? Is it really going to help? So look at it holistically from a finance perspective. And lastly, I would say from a readiness perspective. Are we really ready to roll this out? Because readiness is also about adoption. There have been cases that I have noticed in some of my clients. They be it AI or any of these apps, they just, oh, this is so good, let's just go for it, and they just spend money getting the licenses for most of the team members. But then people who are actually using it, they don't find great value in it for whatever different reasons, right? So basically, there was no adoption. So are we actually ready to adopt this? Because there's no point if the business spending so much, investing into the AI, the latest technology and everything, but the team not really finding utility in it. So I would say it is like, think about the value, the impact, the risks, look from a finance angle, and the readiness is what I would want to share.
I think what I also want to anchor out what you're saying is everything does not need AI. So that's the first point.
Absolutely.
First point that
Yes.
every leader should look at, because AI is an expensive business. I will tell you, because I've been seeing implementation. I've been talking to most of the advisors, people in the fraternity. I've been looking at cybersecurity sites also. So
Yes.
what
Yes.
we see is how much of your data is used to train the model. First point. The second point is, are you giving the right data for it to train also? Because if your data is not clean, you can also create a problem for your own systems, which is a
Yes.
big risk that we see.
True.
Now evaluate the initiatives in such a way that it adds value, as rightly you said, Sangeeta. It really needs to look at, we need to look at the cost that we are going to spend, the opportunity cost that we are, how do we adjust the risk is what we should, what is the return that we are
Yes.
going to look at, the capacity constraints. Because as you rightly said, the guy is going to implement it, is the user in a position to have that capacity to use that? That's the second. And we should also have that, where we should stop what we are doing and somewhere say this is where it stops. And that's
Yes.
the point that I think strategy is saying no with confidence and proof, because I think that's where
Yes.
we should cut off saying that this does not make sense for our business. And AI can automate mundane jobs, but there are so many things that don't need AI. So we need to
Yes.
encash on those is what I think is what metrics should leaders own
Beautifully said.
beyond revenue.
Yeah. Yeah. So I said, you said that beautifully. So you said, what metric should?
Strat- I, see, strategy is saying no with confidence and the proof, right? So you need to look at the metrics that say what is that proof that is coming up, right? Hello, Sangeeta, I lost you for a minute. I lost you, Sangeeta. So
Yes. Yes. Sorry. There was some glitch. Yeah. I lost you. You can hear me now, right?
yes, I can. So what we
Yes.
are
Yes.
saying is strategy is saying no with confidence and the proof, so that proves the metrics, right? So you should
Yes.
also
Yes.
have a list saying that something is not required, you don't need to do that. So that's
True.
the point
True.
that I'm trying to look at now.
Absolutely.
What metrics should leaders own beyond revenue is what I wanted to look at.
Yes, yes, wonderful, wonderful. So I would say, firstly, it's the profitability, right? End of the day, it all ties down to the profitability part. So the key metric is, what are the different profitability metrics? It can be like your gross margin, net margin, EBITDA, whatever. So from the profit metric is important. The second, like I said, is on the cash flow, right? So the cash different metrics, it can be your current ratio, whatever, the liquidity ratio, whatever, from a cash perspective. Third is your ROI, return on investment, right? So that is something leaders need to be constantly aware of. Then I would say it's your efficiency and productivity, right? How effectively are the resources being utilized? So there must be metrics that to track these aspects. And lastly would be the sustainability aspect, right? That is on my long term. So if you were to look at it, along with the revenue, I think I would say that revenue is what helps the business to scale. So that metric becomes important. Then profitability is what is actually showing value to the business. Then comes your cash flow, which talks about the liquidity part. The returns is talking about the capital discipline for the business. The efficiency is what talking about your operational strength, and your sustainability is what is reflecting on the future readiness of the business. So I think if leaders start tracking all these important metrics, that really helps the business to grow.
Very important. Now, I think what you are saying is, you. I had another question which you answered partially or clearly. The my question was the next question which I wanted to look at. What are the five metrics you watch ensuring growth is healthy? So, in that
Yeah.
piece, I wanted to look at margin, CAC, LTV, crunch, cash
Yes.
conversation.
Correct.
So, you addressed most of things there. Now,
Yes.
how do we prevent growth from becoming expensive momentum? Because most of the people say we will roll it fast, we will get this to live, we will bring this initiative so that it adds value, but sometimes it becomes expensive. How do you look at this, Sangeeta?
Yeah, this could sometimes, be a bug, is what I would say, because, on surface, sometimes I've noticed everything looks good on, prima facie, it looks good because the revenue is increasing, the people are busy working on it, the markets are expanding, everything looks good. But if you remove this carpet and see, your margins are probably shrinking, your cash situation is probably getting a lot tighter, and
Hmm.
there is just too much complexity that's been happening, uncertainty, there's just too many things beneath it, while on the surface, things look very hunky dory. So leaders need to be very, very cautious of that. And before we were to push a growth initiative or anything, I would like the leaders to ask some questions, like, for example, by a particular initiative or anything, will this actually improve or dilute my margins? What is the impact it's going to have on my margins? Is this actually going to generate more cash, or is it going to eat into my cash, right? What about my unit economics by doing this? Uh, what what are we not doing because of this? What is the business missing out, right? So if they ask these uncomfortable questions and look at it from a holistic manner, I think that would give them some insights to see, and ensure they're not falling into the pitfall of this expensive momentum, is what I would say.
Because what you said is my view in many aspects, because people just rush things, and then after a lot of burnout is done they realize we did a mistake. So I think tailored for mixed audience startup is what we should look at. Enterprises plus enterprise, can we cater to the enterprise also when we look at it, and
Yes.
keep the lens sustainable growth, predictable economics. So everything should be tied to a key objective is what I see. Growth that burns trust and cash isn't growth, right? So it's a drift is what we
Yes.
burn out, but we burn everything and then we see we are drifting. So that's what I think. How should leaders evaluate tech investments? Because now everywhere tech is there. Now you have agrotech, you have biotech,
Yes.
you have fintech, you name something, there are so many techs that have come out. So
Right.
how do we
Right.
look
Yeah.
at
Yeah. Yeah.
evaluating these tech
Uh,
stuff?
Yes, yes, yes. I think this is a lovely question that you have asked. So I would want to talk about five things here as well. So firstly, before tech investment, I think the first thing is your ROI, right? What is going to be my return on investment? The second is again to evaluate the risks. What are the pitfalls that we need to cover up for? How is this going to roll out, going to look like? So looking at the risk. The third thing, important one, is your timing. Is this
Hmm.
the right time for us to roll this out, right? How is this tech going to be ready for us, for our employees, for the customers? So looking at it from a timing perspective. Next, I would say, is from a resource perspective. Do we actually have the resources, right? Be it financial resources or people running it. So are we ready from a resource perspective? And of course, lastly would be the value that you're creating. So I would also want to share here, as a coach, when I've been working, I have also noticed some common mistakes that many leaders tend to do. So, for example, they are like, uh, approving based on hype. Oh, everybody's using this. This is what everybody is talking about. So let's go ahead. Let's go and adopt this. So there's a lot of hype, right? And they're not looking at it from their perspective. That's one. Next is underestimating the total cost of ownership. Many times they're not looking at the holistic picture. So what is going to be my total cost? Or they may just think this is just a one-time investment, right? They're not looking at it from the ongoing cost and the
Recurring,
spend that they
recurring
have to do.
cost.
Yes, yes, the recurring cost, probably they're not looking at it. Another thing that I've noticed is, if this tech investment is a big thing, right? So that also means there's going to be a lot of change in the processes, in the way of management, the way of adoption. So are we ready for that? So evaluate that before you're actually moving into a tech thing. And lastly, I would also say, they tend to overestimate just the short-term benefits, right? Oh, in the short term, this is what it's going to happen like. But failing to look at it from a long-term perspective. So I think just be mindful of this before you're evaluating a tech investment.
Very apt points. No, what we see is, I'll take an example of using an AI tool itself. One
Mm,
tool may cost you 1,000 rupees, but if I have to
mm,
give you 1,000 licenses, and it becomes a bigger money, and this is a recurring cost which is going to be every month, which is not in your plan at the moment. Now, how long do you want this tool? Are we going to use it permanently or not, is another pointer that comes into picture. So this is a small example, but as you rightly said, there are so many things to be considered. How is that the team is going to adopt? Will it change? Who's going to take the ownership? Now you implement something, who's the person who does the testing, who does the implementation? That clarity has to come out. So that also
true.
becomes a real challenge. What's your decision checklist for tech spend? Build versus buy, total cost, adoption, and business impact.
Okay. Um, so I think before deciding, leaders need to ask some important questions, right? So things like, what is going to be the real advantage, right, by doing this tech spend? Uh, so ask these hard questions like, what is the benefit that's going to come out of it? So then it's like, uh, how much is it going to cost? Right? Like I said, look at it from a holistic. Is it not just your, upfront cost, but, are there any hidden costs? Are there, anything else in the, like you said, the recurring costs? So look at those aspects. And then, from the adoption perspective, like, will this actually be really used by the team, and is it going to be useful for us, right? So ask that. And also, like I said, I think, like, what is the value it's going to create? So once they are able to look at it from a holistic perspective, I think that will help. And if they were to evaluate, like, whether I need to build it or buy it, so, or buy it, or even outsource it, they should ask, like, is this going to be a differentiating factor? Is it going to add on to my USP, right? Ask that. From a cost perspective, like I said, full the life cycle, they need to look at it from a life cycle perspective. And adoption perspective is, like I said, is the team ready to use it? And from a business impact, what is the measurable value that it's going to create, right? So if they can ask themselves these sort of questions, I think that will actually throw up a lot more insights. And I think that's what is going to help the business propel ahead from a tech perspective.
No, very true, Singh. Now, one last question because we are on top of the hour. And so, how do leaders avoid this tool sprawl? Because and still move fast. You have hundreds of tools come up in the market now. How do we look at this point?
Okay, so one thing I have noticed, when I work with leaders, is they say, like, oh, we want speed, right? And therefore, since if they have a tech budget, that too, they just go ahead and splurge and, get all the different tools that are available. But they're all sometimes doing similar things, right? Just that they are, like, kind of packaged differently, or with many minor feature differences, right? And that is when I feel organizations, they drift into this tool sprawl that you are mentioning out, and that is actually, instead of empowering, I feel it's actually pulling you down. So the question that leaders need to ask is, how do I enable speed but along with discipline, right? And therefore it's important to have a clear tech philosophy across the organization, right? So that everybody is together on the same page. Tech dashboards that give you the view of, everything, so you know that you're not actually duplicating and getting stuff that are somewhat similar to each other. Have a discipline, like, it's not, maybe you want to have a limit, or or ensure that you're just getting, if you're getting one in, you want to probably do away with something else. So ask, have some sort of principles that you would want to have as your guiding north star. And probably you should also have like a decision filter before getting any new tool. You may want to have like a checklist to say, hey, do we have something similar, or am I just duplicating it, right? Or how well does a particular the tool, uh, uh, how well does it integrate with our existing systems, right? Because sometimes it's not like you need to get something else to as an add-on for it, and then your total cost, and of course from an adoption perspective. So if you can have some sort of a checklist for at each decision level, and make it common across the organization, so that every leader knows what to follow, and they are also able to share these tools. Because like I said, when different teams tend to work in silos, each one is probably getting the same tool if there are no proper controls. So instead, can we partner and collaborate, and stop working in silos, work together towards common goals and the bigger picture of the business? I think that would really help, is what I want to say.
Sangeeta, I'll add one question because that is a very crucial question for me to understand. Because
Sure.
we are in a world where we have tech, but there is a lot of attacks coming in, right? So
Oh
the
yes.
finance piece is very important. Now, with that, what we are the previous question, we need to tie that to a TCO, as you rightly said, and also look at a time to value, adoption, evidence, encourage. So, how do I realize portfolio realization is what we wanted to look at. Now, coming to the next point, we have so many things that are happening. How do we frame a cyber security as a risk reduction, operational resilience without fear? Because if there's a mistake, the fines are huge, right? So the finance teams will come up, has that been factored, not factored? How do we mitigate those things? Because
Right.
that's one question which I wanted to add before we conclude. How do we frame that risk reduction, operational
Right.
resilience without fear, and also have the boards ready if there is an issue? We're ready for the fines, we are factoring for those kind of budgets. So do we look at that? How do we look at that?
Yes. So, since I'm on the board of few companies, when it comes from a tech person, and I'm not a tech person, right? So obviously, like from a board perspective, I think if the tech leader is able to articulate clearly, not come up with jargons, because I'm not speaking the language of tech, right? So instead, not talking about threats. Instead, what I think they should speak is, what is the business impact, right? So if you talk about business impact, that is something the board is going to understand. So talk about business impact, and don't scare with the fear and the threat and all that. So instead, talk about the business impact. Then talk about like the financial exposure, right? Because cybersecurity is something so important, and unless you're talking about financial exposure, the ears will not pop up. So talk about the financial exposure. Then instead of making the cybersecurity as an IT spend, instead of that, talk about it as a risk management, right? Because that is what it is doing, right? You're eliminating your risk, so mitigating it and bringing the level of risk down. So talk about it as a risk management and not just as a spend. Also, I would urge you to focus on different scenarios. If this happens, this is how it happens. So the multiple scenarios, the board is something, they would love to look at different scenarios instead of getting into heavy tech jargons and too much of tech details. Don't do that. Come up with case scenarios, that I would say. And very importantly, talk about the benchmarks, and then compare, saying, the industry, this is the industry trend, this is how our particular competitors doing, because those give signals that, hey, yeah, okay, we should not be left behind, and we should also guard our cyber security important. So I think if the leaders can present it in a nice structured manner, like to say, like, this will actually mitigate the top three business risks, right? And it will likely to have a potential impact from both from a financial as well as an operational perspective, because this is our current level of exposure. This is what we are doing today, but then, this is the gap, and therefore we need to plug this gap by doing, whatever is the proposal, and for which this is the investment required, and this is actually going to reduce my level of risk. So if they can put it, like, in a nice storytelling format, and that even a non-tech person can very easily understand, I think that makes a lot of difference.
Now, I'll do a little bit of storytelling here because you brought this point there. Because I'm a tech guy, you're a finance
Yeah,
lady. So
right.
what I look at when I speak to the boards is I would like to tie up what you rightly said is keep it credible. So you will have to have the credibility there and talk scenarios, because now we're talking about fines, right? So with the DPDP Act coming into picture, now
Yes,
you need to know what kind of data you are supposed to collect, how it is stored, the way it is presented. Now, if you don't do, what is the fine? That is, are you
correct,
ready to
correct.
be available to get that kind of a fine? Now,
True.
what would be the material impact that will bring to those pointers if that is a issue that we face? Consent management today is a big thing, because if you don't have a consent and you use something, definitely you are
Oh,
liable
yes,
or sued,
yes. Yeah,
right?
privacy is become so important.
Yeah,
Absolutely.
important. Now, in our country, we've given Aadhaar card just for left, right, center to everybody. So you can do anything with Aadhaar card. We don't even sign. I've told this in, I had a session in the morning, so I was telling them how many people, while taking something and you are asked for an Aadhaar card, you blindly sign without putting a date.
Absolutely.
So
True,
you
true.
need to put a date saying that this is the date I given. Every signature document, I think, is a validity for 90 days. Beyond that, it should not be there. So I think
Yeah,
that's one way of looking at DPDP rules. Now, what is the regulatory exposure that you as an organization will take? So that is where you will have to take, and
correct.
this all will bring into what is the brand value or compromising if you are not doing this thing. So I think
True,
this is the
true.
story which you should bring to the board
Yes,
and say, if
yes.
this is implemented, we'll reduce the false positives on the incidents that are happening by
Hmm.
60%, 40%. Put a number, and as you rightly
Correct.
said when we started also, put a number and it will talk about the story what you are supposed to look at. So I think
Yes.
that's the way I should look at, is my way of telling the boards from a technical angle is what I think. I thought I'll put it across. Am I
Lovely,
missing
lovely.
anything, Sangeeta, here?
Sorry?
Am I missing any pointer that we should look at as a story when?
You put it in a very nice storytelling manner.
Thank you. So with this, I've taken some of the pointers that as a takeaways before we conclude. So I'll read out those pointers that I have in mind with this
Sure.
topic and this one. Financial mindset in leadership, ownership is very important, and decisions, trade-offs, and evidence, just not understanding numbers, is very, very important. That is what we want to look at. Financial language, we started with that. When we talk a language which we say, it is authority, influence, especially in the boardrooms where CXOs conversations are looked at. Sustainable growth needs metrics beyond revenue is what we are supposed to look at. Margin, you told the important pointers: margin, cash retention, risk adjustment outcomes. So these are pointers. Tech and cyber decisions become clearer when you frame the value, resilience, and the measurable risk reduction. That's what we want to look at. High performance becomes sustainable when leaders track ROI, right, and
Yes.
on effort and simple priorities with confidence. So that's what we wanted to
True.
look at. Any final pointers before you we close with the closing statements, Sangeeta?
Yeah. So I think, as parting words, I will say that uh, most importantly, look at the financial repercussions, the financial impact any decision that you're taking has on the business, right? And be financially literate, wear your financial mindset, because that is what is going to elevate your position. And when you speak the language of finance, right, automatically, there's a lot of weightage given to what you say. And that is the true example of a high performance leader. So I would like to wish all our viewers the very best in their financial high performance journey. And remember that finance is something that you need to focus on if you want to grow further as a high performance leader. So that is what I would like to conclude with, and wishing everybody the very best of financial high performance.
Thank you, Sangeeta. Now, this episode brings a closure to our Tejastree this year, March
Ah,
2026, because this is
nice.
going to be the final episode for the month where we are talking about women leadership. Looking forward for the third season next year, which is March 2027, where we'll have
Right.
two episodes a week that we are doing at the moment for our
Nice.
this one where we talk tech, cyberspace, leadership, and growth. On Wednesday, we talk tech and cyberspace. On Thursday, we are speaking about leadership, finance, and all these pointers where leaders need to understand. Where we will be bringing the celebration of women achievements next year, March again. And Sangeeta, thank you for bringing the boardroom clarity with human warmth. The message is powerful when women leaders lead with financial mindset. They don't just manage performance, they shape outcomes, build resilience, and earn a strategic ownership, is what we are saying.
Yes.
And with
Yes.
this, I have three comments which are there. We will, as we are on top of the hour, we'll comment it on the comment box, and we will do that.
Sure.
And
Sure.
with this, I think we would like to conclude our session. Thank you, Sangeeta, for being here again. And it's a
Yes, thank you. Thank you. You're doing an amazing job and continue to do what you're doing. And glad to be the concluding keynote person for this Tejastree that you've been doing. So kudos, keep continuing, keep rocking, keep shining. Thank you.
thank you.